Hello guys, welcome back to my channel. Don't forget to like, comment, share, and subscribe. Dollar below recent peak. Asia data out Tuesday rate all cloudy page to our regional economics. 9% year-on-year jump in Japanese wholesale prices point to pressures on corporate margins. Yet a showdown in gains for August holds some hope of relief. In New Zealand, rate hikes which began a year ago are starting to bite, sending home prices down 6% since last August. The investment banking world is also offering a counterpoint to stock market enthusiasts. Goldman Sachs mulling job cuts. A person familiar with the plans told Reuters. A KKR lead counters team has told Australia's Ramsay Health Care it will not improve its billion cash on stock over for the hospital operator, a move that will likely put a deal on ice. In currency markets, the dollar is of recent peaks. Its index against major peers was steady at 1,000 after falling 7% overnight, the largest daily decline since August. Tailwinds from last week's European rate hikes left the euro extending a bounce and above party at $70. Even though the better Japan yen is having a breezers a bit stronger than last week, 24-year low at with some investors closing bets on further slide as rise of official interventions increase. U.S. Treasury yields rose overnight after some lockstore action, selling was heaviest at the very long end, with the 30-year yield up about 6 bps to around 3%. Benchmark 10 years yield steadied at in Tokyo trade on Tuesday, winning to the 2-year yield of US. Gold, copper, held recent gains as US CPI data looms. Gold prices moved little on Tuesday but held on to recent gains as investors awaited more signals that US inflation was moving away from peaks here this year. Originally 1% to on once will gold fell 2% to 1 by 8, but investment rose over the past 3 sessions as the dollar returned from a 20-year high hit last week. The Green Book fell further on Tuesday with the losing 1% after consecutive days of losses, a mix of profit-taking and anticipation of data showing more easing in U.S. inflation weighed on the Green Book in recent weeks, which is due at Tuesday, is expected to show inflation easy to an annual rate of 8% in August from the pair months reading of the reading will mark its second straight month of this line from a 40-year peak hit in June, and will indicate easing U.S. inflationary pressures on declining forecast and after a slew of interest rate hikes by the Federal Reserve. But markets still expect the Fed to keep raising interest rates at a steep pace for the remainder of the year, given that remains well above the central bank's annual target of 2%. Traders are pricing in over 90% change that the Fed will raise rates by 75 basis points, the upper end expectation next week. This is widely expected to boost the dollar and treasury yields while keeping gold prices depressed in the near term. Gold has plummeted from high we hit earlier this year as investors saw better returns from the dollar and sovereigns debt amid surging interest rates. Among industrial metals, copper prices continues to trend higher, driven by a weaker dollar and expected supply disruptions from a strike at Charles Escondida mine. United works at Escondida, the world's largest copper mine, fails to go on strikes beginning this week. The move is little expected to target global copper supply, benefiting prices. But copper also has content with sluggish demand in China, the largest part of the red metal. Stock extending when run up on optimism inflation peaking, and the stock future held firm while European stock futures dipped, setting the stage for a subdued start for European markets. The MCCI analysis, however, warned that U.S. core inflation is likely to March and that the near-term rate inflection are unclear. European stock higher M&A talk helps sentiment. European stock markets edged higher Tuesday, helped by M&A talk, but investors remain cautious ahead of the release of U.S. inflation data that will offer a crucial guide to the Federal Reserve's interest rate outlook. Maybe that's all from me. Don't forget to like, comment, share, and subscribe. Thank you.